Welcome to Skilled MBA Case Study Series in Accounting. Research published a report alleging accounting irregularities at Catalent, suggesting inflated financial statements. These claims of questionable practices demanded scrutiny, shaking market confidence. Investors reacted swiftly, causing significant stock volatility. The allegations highlighted the need for transparency and accuracy in financial reporting, emphasizing the impact of such reports on market dynamics and investor trust. Glasshouse Research accused Catalent of accounting irregularities, suggesting questionable practices and inflated financials. This report led to significant market volatility, shaking investor confidence. The allegations demanded a closer examination of Catalent's financial statements, raising concerns about their true value. Fiat Lux countered the allegations, arguing that the supposed red flags were misinterpretations. They defended Catalent's business practices as legitimate and provided an alternative analysis of the financial data. Additionally, they questioned the methodology and motivations behind Glasshouse's report, suggesting it lacked objectivity and thoroughness. The market reacted swiftly to the allegations against Catalent. Stock prices fluctuated as investors assessed the potential impact. Analysts debated the credibility of the claims, with some downgrading their ratings. Media coverage intensified, influencing public perception. Stakeholders demanded transparency, prompting Catalent to address concerns and stabilize investor confidence. In the first week, the Securities and Exchange Commission requested information from Catalent concerning allegations. By the second week, Catalent issued a formal response addressing market concerns. In the third week, a voluntary audit committee review was announced. By the second month, initial findings were shared with regulators, demonstrating proactive engagement with regulatory bodies. Catalent swiftly issued a public statement denying allegations, emphasizing their financial integrity. An independent audit committee was established to scrutinize accounting practices. To reassure stakeholders, Catalent engaged in direct communication with major shareholders, addressing their concerns and reinforcing trust in the company's operations. Catalent's financial review revealed no material errors, negating the need for restatement. Minor reclassifications were made in subsequent filings. To address concerns, transparency in financial reporting was enhanced, and additional internal control measures were implemented. Despite the controversy, 65% of analysts maintained their ratings, reflecting confidence in long-term stability. However, 25% downgraded due to uncertainty, highlighting concerns over immediate impacts. Interestingly, 10% upgraded, viewing the price drop as a buying opportunity, indicating diverse perspectives within the analyst community. The reputational impact was significant, with a 15% immediate drop in brand trust among institutional investors. A proactive media engagement strategy was launched within 48 hours to address concerns. Survey metrics suggest a 3-month timeline for reputation stabilization, highlighting the importance of swift and effective communication in crisis management. A credibility assessment framework is crucial for evaluating short seller claims. First, examine the research firm's track record. Next, assess the quality and specificity of their evidence. Review the company's historical accounting practices and consider potential conflicts of interest. This structured approach aids investors in distinguishing between genuine concerns and profit-driven claims. Unexplained accounting changes, auditor resignations, and material weaknesses in controls are genuine red flags. In contrast, industry-standard practices mischaracterized, scheduled auditor rotations, and minor control deficiencies often serve as red herrings. Executive departures during investigations and delayed financial filings also warrant scrutiny, unlike planned retirements or brief extensions for complex matters. Long-term investors should incorporate short seller claims into a broader decision framework. Conduct thorough fundamental analysis. Assess the validity of short seller allegations and evaluate the company's response. Consider management's credibility history and apply risk-adjusted position sizing. This approach ensures decisions are based on comprehensive insights rather than emotional reactions. Analysts should independently verify aggressive accounting accusations and assess the credibility of anonymous research reports. Evaluating the effectiveness of a company's communication strategy is crucial. Understanding the disparity between market sentiment and fundamental reality, while recognizing patterns in short seller targeting, enhances decision-making. Evaluating conflicting research narratives requires a systematic approach. Prioritize data-driven analysis and cross-reference multiple sources. For Catalent's financial communication, transparency and clarity are crucial. Simplifying complex data for stakeholders can enhance trust. In risk assessment, focus on cash flow consistency, revenue recognition patterns, and audit trails to differentiate between accounting irregularities and standard practices. Thank you, and at Skilled MBA, we focus on dissecting real-world financial puzzles to enhance your decision-making skills. Our approach involves evaluating conflicting research narratives and refining financial communication strategies. We emphasize identifying key indicators to differentiate between accounting irregularities and standard business practices, equipping you with the tools to navigate complex financial landscapes effectively.